Revolving credit, like a credit card. Right of refusal or rescission. It's by TILA. The right to cancel a home equity, HELOC, it can cancel within 3 days and must be given 2 copies to all parties. Risk-based pricing. So when the lender offers higher rate, points, or fees based on a higher risk borrower. Safe harbor. When APR exceeds the APOR by 1.5% to 2.25% and meets all other requirements for a qualified mortgage, Safe harbor states that it can still be a qualified mortgage. Safe and Fair Enforcement Act from 2008. It mandates nationwide licensing system for MLOs and reduces mortgage fraud. Safe Act jurisdictions. Licensing states cannot make MLOs that work in depository banks get a license, and regulatory agencies cannot give jail sentences, can only make rules more stringent than Safe Act. Depository institutions, MLOs registration as a registered MLL and unique identifier. Safeguards rules requires all institutions to implement safeguards to protect customers' info while it is in the custody of the institution. This aspect may be the most demanding under the Graham-Leach-Bliley Act because it requires institutions to take action and implement. SARS, Suspicious Activity Report. You can send those to the Treasury Department and filed online through the SinFin website. Seasoned Quality Mortgage. In portfolio by original creditor for 36 months makes it a seasoned qualified mortgage, not quality qualified. SEC enforces federal securities and oversight and regulation of the secondary mortgage market and MSBs. Securitization, pooling multiple mortgages into a single package and selling them as MSBs on secondary market. Separate maintenance payment, like alimony. Servicing transfer, so when the primary lender sells a mortgage to another lender on the secondary to handle the servicing. SFHA, Special Flood Hazard Area. Short-term debt is intended to be paid within a year. Long-term is over a year. Single-purpose reverse mortgage. It's the least expensive reverse mortgage. It's for a specific item like taxes or repairs. The home equity conversion mortgage, the HECM, is federally insured by HUD and can be used for any reason, and it does have a maximum. The proprietary reverse mortgage is used for a home appraised at a value higher than the federally backed HECM. SIVA, Stated Income and Verified Assets. It's when income is not verified but assets are. SRP, Service Release Premium. On the sale of a loan, the amount of the SRP is based on the note influenced by interest rate, etc., etc. Statement of denial. Responsible for issuing and citing reasons for negative loan response. State Regulation Authority. Each state has for a non-depository mortgage lenders. Stable growth income. Income that can be expected to continue. Steering. Trying to get a customer to do something, like maybe a loan, you make more money on one, so you try to influence the choice of that buyer or tenant. State mortgage regulatory agencies. don't have authority to impose a prison sentence. States cannot set standards lower than the SAFE Act minimum standards, and cannot require licensing for depository institutions, MLOs, because they are exempt. Streamline refinancing is with FHA. You don't need to go through the whole process, just a credit check. Structuring. Designing a transaction to evade a reporting requirement in a legal activity. TALC, total annual loan cost. Temporary authority to operate. It's enabled MLOs to keep doing business when moving from a bank to a non-bank employer. To get this, you must be employed by a state licensed mortgage, registered in the NMLS continuously during the 1 year preceding application, and licensed as an MLO continuously during the 30-day period preceding. Temporary buy-down occurs during the first 2 to 3 years. A 2-1 might be 3% the first year, 4% the second, and 5% the remainder of the loan. Third-party fees is something a lender cannot make money off. TILA, Truth in Lending Act Regulation Z from 1968, protects you against unfair credit billing and credit card practices, must provide you with loan cost info, all costs and fees, and the APR. Includes right of rescission within 3 days, and it includes home equity lines of credit, reverse credit cards, installment loans, and some student loans. Title report shows about 35 to 50 years. Total points and fees threshold. We'll get back to that one. Total. It's the technology open to approve lenders' mortgage. It's the scorecard. FA wants its lenders to use, not an automated system. It interfaces with DU or LP. If it doesn't work, you do it manually. TRID, TILA and RESPA Integrated Disclosure Rule, know before you owe rule. 2015, it made it mandatory to provide the loan estimate and the closing disclosure. Lenders must use standardized forms and give the loan estimate and the closing disclosure within a certain period. Cannot charge a fee before offering a loan except for the credit report. Must give loan estimate in 3 days. TRID requires elimination of non-refundable application fees. TRID says you cannot use a revised LE loan estimate after a closing disclosure has been issued. Triggering terms. Amount or percentage of a down payment, number of payments, amount of any payment, amount of any finance charge, etc., etc. Truth in Lending Act is Regulation Z, and it explains triggering terms. TSR is Telemarketing Sales Rule. It can be a fine of $51,744, and you cannot charge to repair credit, and you must update your call list. UDAAP, the Unfair, Deceptive, and Abusive Acts or Practices Act, part of the Dodd-Frank, it's Part E, also deals with advertising practices. UFMIP, Upfront Mortgage Insurance Premium, 1.75%, and it can be financed into the loan. And it's based on the loan amount, which includes finance closing costs. Uniform Residential Loan App, the URLA, also known as 1003, or the Freddie Mac Form 65. URLA is the standard loan application. It allows adjustments like eliminating additional borrower, adding disclosure, changing font size and style, and stuff like that. USC is the U.S. Code. USDA is the U.S. Department of Agriculture, and it develops laws for farming, forestry, and provides a 90% guarantee with the 502G loan, guaranteed loan. Towns up to 35,000 people. The 502G loan is a 90% guarantee, and it's for 30 year fixed loans, no money down, income up to 105% of AMI, upfront 1% fee for the guarantee, and 0.35% annually. And it can be financed, the initial fee. UST, Uniform State Tests, adds 25 questions. VA appraisals, 1 is the notice of value, 2 a certificate of reasonable value. VA is the Veterans Affairs, guarantees up to 25% of the loan. Lender can charge 1% original fee or other fees as long as it doesn't exceed 1%. The VA funding fee is a one-time fee from 0 to 3.3% if making less than 5% down. Funding fee may be in cash or added into closing. The VA loan entitlement, we'll go more on that later. Verifying identity on e-forms, use the email address, IP address, time of consummation, and two-factor authentication. VOD is a verification of deposit form. The VOE is verification of employment. A whole loan is a loan that when sold, the servicing rights come with the loan. YSP is a yield spread premium rebate paid to a broker for giving a borrower a higher interest rate on a loan in exchange for lower upfront costs. Fee received by mortgage broker from lender for an interest rate higher than the going rate, and it must be disclosed.